and welcome to another US Weekly Markets Review brought to you by SG Futures, coming at you today on Sunday, the 28th of February 2021. Now, we're on the back of a very turbulent week across a lot of our major US indices, as well as some of our other global indices, driven primarily by some movement in the US Treasury yield. We're not going to get into the nuances of the movement in the Treasury yield, but they do have an inverse correlation to the performance of equities. So this week we're going to have a look at the three main major indices that we trade, and we're going to put a case together for whether we're on the bull side or on the bear side of this case. Really coming in on a Sunday afternoon, doing some analysis on where we think the markets are going to go over the next 5 days. This has been probably one of the more difficult pieces of analysis I've had to do around the US markets of late, because there's a little bit of a change in the mood music across the US equities, and that could spell a number of different things. And we want to try and get across this week in our video that there are some potential nuances that market profile can tell us that could potentially push for the bull case, and then there are others that are a little bit more on the bear side. So we're going to start a little bit different this week, and we're going to start on the US Russell 2000 index, which is pretty much all the US small cap stocks. And the Russell 2000 has been a real leader across the main US majors of late due to the oversold nature of some of the stocks that make up that index, due to the recovery from the coronavirus coming on the horizon. So what we've seen this week is really probably more of a case for things on the bull side. So we know that this index is a little bit of a leader. However, that could be changing somewhat. We don't know, but previously it's led the way in terms of the direction of the other majors. And what we can see is over the last 5 days, what we'll just mark it off is we have Monday, Tuesday, Wednesday, Thursday, Friday. So we have these 5 candles in here, and we can pretty much say that this is almost like a period of balance across these 5 candles, that the market it's pulling back a little bit from being quite overextended from the 20-day moving average, and it's allowed the 20-day moving average to catch up somewhat. And what it's also done is it has, over the Monday, Tuesday, and Wednesday, it has respected the 20-day moving average. It failed on Tuesday, so it broke below the 20-day moving average and then retraced back, which again is very, very interesting and something we carry forward. Then on Wednesday, it was quite bullish, and then on Thursday, pretty much all of the US indices sold off pretty heavily, and we saw more of the same on Friday. We have to add into this the nuance that we were coming into month end on February, so there's often you'll see a little bit of a balancing of the books coming into the end of February. So we will take this sell off on Thursday and Friday, maybe with a little bit of a pinch of salt. Really, let's see what happens on the Sunday evening Globex this evening to see whether this selling was in fact real and is going to continue into next week. But one thing that is really, really useful to point out, and we mark off in these videos all the time, we talk about balance areas. So we're going to look back here to a balance area which dates pretty much all the way back to, let me see, sort of beginning to mid-January, and it runs for about sort of 10 days there. And we can see here that we've got a high and a low, and when we extend this across, we can see here that the market has pretty much respected that balance area that was there previously. We can see we closed just on the nose, just above the high of the balance area on Friday, but we can see that the tails of these candles have explored into that balance area, and at this point in time, it looks like it's been rejected. So if it has been rejected, then the target is the top end of balance. So the top end of balance in this case would be around the 22.90 mark, or maybe even up around the 23.13, depending on how you break up this period of balance in here. So that's potentially something that the bulls can cling on to as we move into next week. What is the opposite side of the coin there is the high of the day on Friday. I've just marked it out in the crosshair, is the 20-day moving average. So we've tested the 20-day moving average from below, and we've failed, and we've closed in and around the top end of the previous balance area. So really, it would be hard to see that we don't see a touch of the 50-day moving average at some point, but that would probably require some increased selling into this balance area. And if we explore and we get acceptance into the balance area over a couple of days, then we target the bottom end of the balance area, which would take us down to around the sort of early 2100s sort of level. So that's things from a Russell 2000 point of view. As we come in this week, we're really going to be taking each day as it comes and there may not be as much from a swing trading point of view, because typically we like to confirm and verify that the market has a direction. And this could be a period of chop over the next couple of months where the market's just going to trade back and forth within a particularly big area, and it's going to become very, very difficult to trade. And that's usually when we shift our strategy to a much more short-term type strategy. So that's things from a Russell 2000 point of view, and the nuances here are something that'll be in the back of our minds when we are trading the E-Mini S&P. So let's have a jump across and have a look at the NASDAQ 100, which is traded slightly different this week due to a large amount of selling in the tech sector. So we jump across into the NASDAQ 100. Again, all of these charts, by the way, they are RTH charts, or regular trading hours charts, in a daily time frame. So we are only looking at the regular trading hours from the cash open to the cash close. We do not include Globex in any of this. So the NASDAQ story is a little bit different in that we have our 5 days in here. Again, I'll mark them out in here. So that's our 5 days. And we mentioned on Friday that we were sort of flirting with the 20-day moving average. So this is last Friday gone. We were flirting with the 20-day moving average. We had had a proper touch on the Thursday, and then on Monday just gone, on the 22nd, we actually gapped below the 20-day moving average, which led to quite a lot of selling throughout the week. We have seen a good, decent breach of the 50-day moving average, which is the blue line in the middle here. And Thursday and Friday have seen closes below the 50-day moving average. So this probably leads more towards the bearish side of things. One of the nuances we'd really want to carry forward is we have a level down here in and around the 127.50 mark, where we've had pretty much 3 touches this week from a low point of view. So we've traded down to this particular area here, and it is, and in my experience, if we have another touch of this area, it feels like we're going to go straight through it, and we may target some previous highs that the market may have put in. So we'd be looking at immediately, we'd be looking at highs of in around the 12,300-ish, then down to 12,150, and then if we get really super bearish, we might be looking at the just above the 12,000 level. That'd be probably a really key support level. I'm not sure we get down there, to be honest. It feels like there's a lot of people who are willing to get along this market and who are willing to step in and buy some dips. So really, like the Russell 2000, we will be taking this market one day at a time. This feels like it's a little bit of letting off of steam, considering we've had such an amazing rise up from the kind of the tail end of October last year. Has been an amazing rise. We've only had a few touches of the 20-day moving average, and it's normal for a market like this to blow off some steam, people to take some profits, and to see a little bit of noise and some chop below the 20 and the 50-day moving average. So we're not panicking from a bull point of view just yet. Worth noting, the 200-day moving average down around the 11,650 mark, definitely be one to keep an eye on, but really we'd want to be collapsing at an unmerciful rate if we are to get down there. You're looking at the guts of 1,300 handles down there, and I don't see us getting down there anytime soon, but that is just for everyone's reference. That's where the 200-day moving average is. So really the core market obviously we want to look at this week is in our E-Mini S&P. So let's flick across to our usual chart in there. Here we have our RTH chart on the E-Mini S&P500, which is in a daily time frame. Well, like previously, we'll just mark out the days in here. So that's Monday, Tuesday, Wednesday, Thursday, Friday in here, starting with this particular candle over there, just here. And if we look back to the video we did last week, we talked about this Friday candle in here, and that we had closed in around the middle area of balance from the previous 10 days. That there was the potential that we may explore lower should there be any sort of negative sentiment spilling over from the Sunday night futures and then also into the European session on Monday, and that's kind of what we got. And we saw on Monday we didn't have a touch of the 20-day moving average. We explored higher, we were rejected out of this balance area from the previous week, and we closed just below it. We kind of closed in a bit of a no man's land, which was interesting. Then on the Tuesday, we gapped lower. We explored some lows down here, and this is where we started to look inside a previous balance area, which we would mark this out in here as a previous balance area. and we have explored in there, but on the Tuesday we rejected, but importantly we closed above the 20-day moving average. So it was really when we got into Wednesday, we saw the bull mode really continue, and we gapped down slightly below the 20-day moving average. Buyers stepped in early, and we had a pretty strong rally over the course of the day. What is interesting, where we closed on Wednesday was in around the 39.25 level. So the 39.25 level is becoming an incredibly significant level, in that we've had so many touches and it's acted as resistance so many times that now it's probably going to take quite a good chunk of order flow to get us through it. I feel if we get back up there again and have a decent go at it, that we will break into new all-time highs. It is worth noting, and we're going to show this on the profile as well, we have a Globex period up here, so literally the all-time high is printed in Globex, and those who have taken our market profile course will know all the nuances around that. And when a market puts in a low or a high during Globex, it is deemed to be a weak high or a weak low, and there is the possibility that the market will retrace and repair that poor high. So that's definitely a nuance that we will carry forward, that the market may look to get back there. We have some other nuances we'll look at in the profile in a minute. But then on Thursday we had we've opened inside the previous balance area and we've sold off, and we've come close to the 50-day moving average. We haven't touched it. And we closed just above the previous balance area. So you're really thinking coming in on Friday that you'd almost think we've had rejection in this balance area previously, and the high on there is roughly 38.25 roughly. We've had rejection in there, and there's a good chance that when we fail at the top of the balance area, we retrace back up to the previous high of the next balance area. So that's kind of how we look at things. But then on Friday, we had a lot of quite bearish sentiment over very late in the day, in that we saw quite a heavy sell-off. We saw quite a heavy sell-off into the close, and we had a proper breach of the 50-day moving average, and we closed pretty much dead on the 50-day moving average. So this is a little bit bearish in that we could say that we've had some acceptance inside the previous balance area, and if we start to get acceptance and we don't go back to the high of the balance area, then we start to immediately target the lows down here, which would be the sort of 37.63, 37.65 sort of level in the short term. And then obviously this previous period of balance over here, we would extend that over and we would look at the highs and lows in there. So the high of 37.19, definitely a level we would want to look at, 37.04 for sure. And then if things get really hairy, we're looking at probably a low of 36.41, 36.42 will be definitely a level that we would be looking at. Again, like the previous indexes we've looked at, there's nothing that's really pointing the way in any kind of a clear fashion as to which way the market's going to go this week. We don't have a crystal ball. We've no idea what way things are going to go. Whether, every now and again the markets have a little bit of a canary about certain things, whether it's interest rates, whether it's yields, whether it's death crosses, anything can drag the markets lower and cause a little bit of turmoil, and then before you know it, things have rebounded. So we don't really know coming in this week, but what we do know is how we react if certain things happen, and we really very much take a if this then that approach. So let's have a little look into the weekly market profile just to see if we can gather some other nuances in there. So let me just quickly start by marking off our weekly market profile in here. So it's our weekly TPO from the last week that was. And we can see that we mentioned on the previous week's video that this particular green box in here there was the potential for us to explore in there, and we filled out a decent amount of value, although we have a little bit of a valley in the TPO count in there, so I wouldn't rule us out chopping around in there again. I still believe the 38.80 level is a pretty significant level from the downside. So given that we've closed down here at 38.02, I feel that could be a potential resistance point or a pit stop on the way higher if we get there, given it was a weekly low in here, and also it's a value area high from this particular week in here. So it's pretty significant, one we're looking at, and one that we will carry forward if and when we get through this period of previous single prints and low volume and low TPO count in there. So that's one, the markets have memory for these kinds of levels, and if we get in there, that's how we would play that. Below the weekly profile from this week is we have some single prints. So we actually got part of the way into the gap from, let me mark it out from this profile in here. So we got some of the way into the gap, which is again interesting in that we only got part of the way in. We didn't fill the full gap. So I've marked out the actual gap in here that's left. So 8 handles in there of a gap that's still there. There's every possibility we go in and fill that gap in there. And then we do target this series of single prints over here as well, which would take us down to the sort of high 37.40, so 37.41. Also will correspond to a value area low from this week over here. But really, if things get quite bearish, as we said on the previous chart, this period of balance down here, marked out in this big, huge green rectangle, they would definitively give us some targets. So we would look at potentially buying around the 37.20 on a first touch. So 37.18 in this case on our first touch, and put our stop really just below that. The view would be that we would see failure at this level in here. If we get acceptance inside this box, obviously we target the midpoint, which would be in around the 36.75 level, and then if we fail again, we get acceptance further below, then the bottom of the balance area comes in, which is 36.34. So they're the sort of levels we would look at. Again, there's no crystal ball. We've no real idea how this is going to pan out this week. Let's have a look at things from a daily profile point of view. So when we get into our daily profile point of view, what we have in front of us here actually is some really elongated profiles, which tell us the degree of emotion involved in some of the trading sessions last week. When we look particularly at Thursday, we have a ton of single prints in there. Wednesday as well, we've got some single prints there too. So single prints tell us that emotion is involved. People are in pain, either they're trying to get into the market or out of the market way too quick. They're just hammering the buy or the sell button, and the market's really moving too quickly. So usually it's driven by emotion, and they're often quite telling when we see single prints on the profile chart. So when we see single prints, we use market auction theory that tells us that these prices haven't been auctioned properly, and so single prints tell us that we may potentially go back to those levels again and look to fill them out and allow the market to conduct a proper auction against them. We're going to just zoom in on the profile a little bit, just so we can get a bit more nuance on some of the things we've seen this week. So we jump into our zoomed in version of the profile. We have a couple of things. We're going to start at the very top and then we'll work our way down. What we have is from a Globex period, which was, I think this was President's Day. We have the all-time highs put in, so that's significant. There's the expectation that we come back and repair that. We have a poor high, which dates back to, let me see, Monday the 15th of February. So that is again something, a poor high up there. That tells us that there's every possibility that we're going to come back and re-auction that level. Even when we look at the volume of contracts that transacted there, usually we look for almost single or double digit as opposed to 4 digits in there, which tells us that the auction will be complete. As we move down, we have 2 Virgin volume points controlled. So we have one at 39.31 and we have another at 39.28. They are proper power line targets that people day trade in this market would look at in particular. But these are the fairest prices to do business on a given day. So price will often gravitate back to them. So again, this is from a bullish point of view. These would be the levels you would be aiming for. So these potentially could be good take profit levels if you manage to get in front of a good long position that trades back up here. We have another poor high just down here, which is in here from E period. Tells us that this particular auction isn't fully complete. So this dates back to, let me see, this dates back to Friday the 19th of February. So again, that's another potential point in the road where the market may retrace to. It was in some way repaired in end period of this week on Tuesday. However, I don't usually take the settlement period. I don't usually take the settlement period as a given in this particular instance. And so if from my perspective, and there'll probably be some argument around this, from my perspective, this is still a poor high that needs to be repaired. Again, as we move down, so here we have another Virgin volume point of control at 39.22. What is really interesting on Wednesday, it told us who was in the market exactly. In A period, we opened at 39.07. We traded to a tick in front of it. That tells us that there are short-term traders in the market. That auction doesn't look fully complete either, given looking at some of the volume of contracts that transacted in the top two prices. So again, that's an area of interest that we would potentially be looking at if and when price gets back up here. Then we look at some of the single prints we mentioned on the previous chart. So what we have on this particular Wednesday profile, we have single prints. Again, I'll mark them out in here. This signifies a motion. It's almost like a gap in the market. We will be looking at how the market trades back in front of these levels. Does it get acceptance within these single prints? If it's treated like a gap, do we get acceptance? If we do, how far in do we get? Do we get rejection? How does price behave? So we'll be looking at how the ladder in particular when we're trading this behaves, whether or not we're getting acceptance, and we're going to tag the top and get through it. So that's a significant area that we will look at from an upside point of view. Moving down again, we have a further set of single prints from Wednesday, which is in here. And again, we'll apply the same theory to those. That's from roughly 38.72 to about 38.78.5. So then as we move down, we can see that on Friday, this is probably the last thing we want to try and cover off today, is when we break out Friday's profile. M and N period, I'm really taking them, as I said at the beginning of the video, really taking them with a pinch of salt, in that we were pretty much at month end. It's when you're most likely to see what we call shenanigans. But we were up around the 38.50 mark, and then things just really collapsed significantly. We saw this 38.36 half level as pretty important, and we smashed straight through it in N period, and we came off really significantly. And we broke the Globex low from the day before and put in a new weekly low, which previously had been printed on Monday. We closed, interestingly, if you're really trying to cling onto the bull narrative, we closed inside the overnight session from the Thursday night. I don't know what meaning we would take from that, but this is a typical spike. Granted, usually we see spikes to the upside. In this case, we've seen a spike to the downside. This is price exploration, and this particular period within the market, particularly this set of prints in here, we'll be paying very close attention to when the futures open this evening. So that is pretty much it from us in terms of what we see potentially happening this week. A couple of scenarios. But ultimately, this has been arguably one of the more difficult videos we've had to do, and that feels as though the mood music is changing within the market. Some of the really core big cap stocks are showing quite a lot of weakness at the moment, and that is again something we're keeping an eye on. So it's really difficult to say how things will play out. As we've mentioned multiple times across the video, we will more than likely take this each day as it comes and really try and play what's in front of us rather than trying to go for the big home run play. It'll be very much potentially a scalping approach where we're maybe trying to get on board the freight train of a very short-term move, which may only last 30 or 40 minutes. And that's usually a little bit different to what we do, where we're trying to pick out some proper decent swing trades. So that leaves me just to say, if you'd like to learn a little bit more about market profile, go and visit our website, sgfutures.com/education. You can look at some of our course material in there. We've run a couple of webinars recently as well, where we explain some of the theory for free. You can get that on the homepage, so be sure to go and check that out. That just leaves me to say, hope you all have a great week and happy trading.